Hi everyone! Our group chose real estate as the best type of investment for aspiring investors and for everyone who think of investment opportunities worthy to take a risk. So, let's discover how real estate can lead us to successful investment.
Have you ever wondered how real estate investing works? It's an important question. Among houses, apartments, offices, hotels, and industrial buildings, there's over $35 trillion invested in real estate. But how does real estate investing really work? Fortunately, the basics are pretty straightforward. Let's look at a simple example. Imagine you purchase a house for $500,000, which you plan to rent to tenants. Typically, for a $500,000 property, your investment includes a 20% down payment, $100,000, and an 80% mortgage, $400,000. We call this $100,000 of equity and $400,000 of debt. To simplify the math, ignore closing costs for now. Congratulations! You own a rental property. Now what? Find your tenants. There's a similar nearby house that rents for $2,500 a month. You match that. That's $30,000 a year in gross rental income. Once the cash is flowing, your total return is that amount minus expenses and mortgage interest, plus the change in your property's value over time. Let's walk through that in more detail. You have to pay your property taxes and insurance, as well as some ongoing operating and maintenance costs. Let's say $5,000. Mortgage interest is your other major expense. Your $400,000 mortgage might have a 4.5% interest rate. That's another $18,000 in costs. So, $7,000 a year in residual income. $7,000 divided by your $100,000 investment equals a 7% annual return in cash flow. For simplification, we're ignoring things like income tax and depreciation. But there's more than just cash flow. You can also benefit from potential appreciation in both the rent and property value. The industry rule of thumb is 3% per year of appreciation. Altogether, you might make 7% a year in rent and 3% in appreciation. That's a 10% annual return over the long term. For comparison, the stock market has an average historical return of about 8% return a year. In fact, real estate has outperformed stocks over the past 30 to 40 years. But not everyone has the time or money to be a landlord. That's why Fundrise has built the first easy-to-use online platform for real estate investing. Imagine getting all the benefits of owning real estate directly, but at a fraction of the cost and without the work.
So, first of all, let us know what is investing. So, investing in simple terms is committing or giving of money to a business for a certain period of time in hopes of getting a higher return in the future. Money is hard to earn, but easy to spend. So, wise management of our finances includes investment to aid our financial obligations and our financial problems in our future endeavors. It is important to secure our future life so that there will be lesser stress and also lesser problems to undertake. Next is why invest. So we should invest so that we can have more money to use or to spend in our life, in our expenses, in our hobbies, in our travel goals, in whatever we want in life, and so that we can use our money freely without thinking, how will I budget this? How will I budget that? And so now we chose the type of investment, the real estate. So real estate means acquiring, developing, and managing of real properties to generate income. So, amo ni siya, like example, acquire ka duta. Then, nag-develop ka, patindugan mo siya sa mga houses, like, imo gusto is for apartment or boarding house. So, amo na siya, nagpatindog ka sa mga balay, sa mga rooms, then, you managed it. So, naghimo ka sa mga marketing strategies mo, how you can gain customers, nga dira sila magstay, and then, pag-manage mo, pag may mga boarders ka na, that's how profit starts to grow. So, that's in real estate. For boarders, pwede man nga for businesses, magparent ka sa mga, sa mga space. So, how do investors make money in real estate? So, here it goes. The first one is the rental income. Na kung may mag-rent sa imo nga place nga put up. So, magbayad sila rent every month. That's an income in you. And the second one is the appreciation. So, for example, kung nag-decide ka nga, ay, gulpi mo lang gusto migrate in sa America, tapos ang imo nga business so wala may manage, so you decide nga ang imo nga ginpaubra dito nga mga boarding houses or mga boarding rooms, imo na lang ibaligya. So the value won't depreciate kay sa land palandaan, wala naga-depreciate ang land, and the materials nagasaka. So the value sang business nga imo nga put up maga-appreciate. So still kung gusto mo ibaligya na lang ang imong business kay mamigrate ka naman, you still have an income. So that's how in real estate investment goes.
Real estate appreciation. The most common way to profit from real estate investment is buying a property and hold it until it increases in value due to exchanges in the market. So how does a property increases in value? It is through supply and demand. The supply of the land in the city is limited, but the demand for the residential, office, and commercial space is increasing, especially when the current constructions boom in the country. As a new investor, you will know your property increases in value when your surrounding area becomes busier. For instance, a shopping mall or office building built next door will make your property more attractive to potential buyers and fetch you a good profit. Rental income. Renting is the best way to generate a consistent cash flow every month by charging people to use your property for a specific time. For instance, if you own a house or condominium unit, you can lease out your property to a family, students, or young professionals, depending on your location. Or if you own an office building or strip mall, you can lease out to established businesses, professional offices, franchises, and startups. As a property owner, you have the option to hire a property management company to deal with the day-to-day administration, or if you have the time and willingness, you can be a landlord and manage the rental property. So how to start investing in real estate? Here are 6 steps to start your rental real estate investment. First, establish the specifics. Determine how the investment property will be used before you decide the type and location most suitable for your plans. Here are some questions to think. Will you rent to students, office workers, or tourists? Do you prefer to invest in house and units, condo units, or parking space? Establishing the specific will also help you consider the renovations and furnishing you will be willing to spend on the property you are eyeing. Second, acknowledge your financial capacity. When investing in real estate, you will need a sizable capital. After all, quality properties do not come cheap. You will have to be realistic in what kind of property your savings can afford right now, in 5 years' time, and in 10 years' time. Third, choose a developer. As a new investor, you will need all the help you can get. While the internet is ripe with real estate investment, literature can guide to help you get started. Choosing the right real estate developer will take your investment 5 steps forward. Fourth, write that check. Depending on your financial capacity, there are various payment plans available such as in-house financing and bank financing. Request a sample computation and determine which among payment plans is the most practical for you. Fifth, shape up the property. For your property to attract the right tenants, it should be a proper condition. This means fix up any cracks on the walls, any leaks on the pipes, clean up any stains, and if you are furnishing the property, providing furniture relevant to the needs of your target market. And the last one, manage the tenants. Once you have the property ready for your tenants, you have to ready yourself to be the landlord. Set clear terms and get it all in a proper lease contract to protect you, your investment, and your tenant. Make sure to include in the lease contract the rent price, security deposit, mode of payment, payment schedule, length of lease, provision on what can or cannot be done with your property, and the rules and regulations tenants need to abide to avoid eviction.
What are the types of real estate investments? So there are 5 types of real estate investments. The first one is real estate investment trust. This type of real estate investments are companies that act as trusts and manage a portfolio or real estate investments. Crowdfunding. Real estate crowdfunding is a new method in which a group of investors combine their finances and invest in projects that they would not be able to fund on their own. And here's the advantages and disadvantages of crowdfunding. Advantages. Crowdfunding is an excellent method to diversify your investment portfolio without needing to make a large initial commitment. And disadvantages. Some investments platforms may have a minimum income requirement, which may seem contradictory to investors who are drawn to crowdfunding because of the low financial barrier to entry. The third types of real estate investments is a raw land. Raw land is an investment that is purchased for commercial property or residential development. And here's the advantage and disadvantage of raw land. Advantage. Maintaining it isn't too expensive. You don't have to worry about making repairs or changes as often as you would if you were maintaining a building. That disadvantage. It's possible that you won't make a lot of money straight on. If you're purchasing and keeping land, you might as well wait for it to appreciate while renting it out for a variety of uses. The 4 types of real estate investments is commercial real estate. Commercial real estate is a term used to describe non-residential type or real estate investments. Commercial real estate investments include hotels, warehouses, offices, and retail businesses. And here's the advantage and disadvantage of commercial real estate. Advantage. Commercial real estate has a reputation for producing larger returns than residential real estate. Depending on the location you're in, managing a business property might be profitable over time if you can afford it. Disadvantage. When it comes to commercial investments, you must consider both the general public and your renters. You may require expert assistance to maintain your property up to code and to aid you in resolving any difficulties that arise. The 5th or the last types of real estate investment is residential real estate. Residential real estate is the most well-known and well-understood type of real estate investment. However, you may or may not be aware of a variety of residential real estate investments, ranging from micro-flipping to accessory dwelling units.
To continue, there are different types of residential real estate investments. Number 1 is the long-term rental. Example is the apartment. Number 2, vacation rental. This rental, you choose the days or you rent as little as you choose, unlike the long-term rental. Number 3, micro flipping. Individual buy properties and renovate, then sell it with profit. And last is number 4, flipping and micro flipping. And there are advantages of real estate investing. Number 1, real estate can be purchased at below market prices. It generates steady cash and flows. Number 3, provides a depreciation tax shield. And real estate income gradually increases. And the last, allows for active investment control. And there are also disadvantages of real estate investing. Number 1, real estate investing is a long-term grind. It is real estate income can be variable. It requires maintenance. Real estate rents can decline also. And the last one, it requires your time. That's all. Thank you.